Hey, welcome back to another update of my Canadian Dividend Investing Portfolio. In this series, I'm just documenting the entire journey from when I started until now. It's been about a year and a half, and I'm buying primarily dividend-paying stocks on the Toronto Stock Exchange, using Wealthsimple Trade to buy and sell those stocks, and tracking everything in this custom Google Sheet that I made, which, by the way, there are links down below where you can get free stocks from Wealthsimple, free cash from Wealthsimple, and also get this Google template. So, looking at the portfolio right now, we're sitting around $75,075. We're up almost $9,000, which is about 13%, which is super awesome. Given what's going on in the markets, a lot of tech stocks and growth stocks are really crashing, but I've been more primarily invested in value stocks and dividend paying aristocrats, and so that's been working out pretty well so far, but to each their own. The average yield of my portfolio is about 3.75%, and that means that with $75,000 in stocks, that I'm looking at about $2,818 in passive income from dividends. And we're going to come back at the end of the video and check out how much this increases, because I'm going to buy about $350 more worth of dividend paying stocks. So in the portfolio, right now I think I have it sorted for the biggest positions at the top and the smallest positions at the bottom. This is the usual way that I like to look at it, because I'm often adding to my smaller positions at the bottom, especially if they're a little bit in the red. That's when I like to be buying. I find that to be a good opportunity. I also like sorting it with the biggest gains at the top to kind of understand who my biggest winners and who my biggest losers are at the moment as well. I like buying stocks in the red if I think that they're going to continue growing in the future, which for the most part is all of these. Never really know about Cineplex, they're a bit dodgy, but I think I'm actually going to add a little bit to them today anyways, because they're down so far. Someone was talking about sorting by sector, and that's totally possible as well. So if we can, it doesn't really matter if it's alphabetical, but we can sort it by sector here so you can get an idea of what's going on. For example, we can take a look at the average, percent gain or loss by sector. If you see down here, the average is 4.34% for utilities. That's kind of interesting. For my telecommunication stocks, where the average is 18%, almost 19%, that's crazy. Real estate, we're looking at an average of about 11.59%, so real estate's doing really well lately as well in Canada. Industrials, these ones are a bit mixed up as to what type of industrials they are, but we're still averaging above zero. And when we come down here, financials as well is really doing well. Financials, my average percent for the moment, or my average return is 18%. And actually, if you look at just the banks, which would be these guys, it's even higher. The average is 30%. That's ridiculous. And then when we get down into the consumer stocks, pretty much the consumer industry, we're still averaging pretty well. So yeah, really cool to see that. Thanks you to the person who suggested sorting that attribute. But let's get back into the reasons why I want to be buying some stocks today. Actually, I think we're going to sort it with this one, with the biggest losses at the bottom. So I'm going to try to reduce my average price on some of these for sure, on Power Corporation and Savaria. These make up actually sort of small percentages of my portfolio, just 2% and 1.57%. I'm also going to add a little bit to Aecon, because these guys, I'm still pretty sure that this is a good buying opportunity for me personally, as I do plan to sell some of these once they're in the green for me. I think I'm actually going to add a few of Cineplex as well. Cineplex is super dodgy. I'm never really sure about these guys, but I think I'm just going to add in like 5 shares to probably try to bring down my average price below $15. That would be nice. And when I was looking at these guys on Yahoo Finance, they've been trading pretty much flat for like at least a year. But when I was looking here at the earnings, the revenue and earnings, revenue is, well, since the pandemic is on the rise. And if you look here at the quarterly as well, in the last few quarters, they've been really climbing up quite a bit. And the earnings are getting closer to zero, which is promising. And also, I was kind of just looking around at some of the box office statistics, and like this new Batman movie just came out, and it's just like not breaking records, but like doing very well. And I'm curious to see where this trend is going in the next few quarters. And I think right now, if they're still super beat up, I'm okay with buying a little bit more, as it seems like people are going back to cinemas and like blockbuster movies are, coming back and doing pretty well at the moment. And I don't see why that would slow down as we kind of leave the pandemic. And the other one that I was looking at is actually in the green today for me personally, and that is ATD. These guys are a very good growth stock, very small dividend, but when we look at their spark line in here in the spreadsheet, lately it's just been bouncing up and down like crazy, and I'm always trying to buy it down at the bottoms. Looks like Friday would have been an even better day to buy it, but I wasn't buying stocks on Friday, so that's okay. This is good enough for me, as it's definitely below the trend in the last couple months. So let's jump into Wealthsimple Trade and go buy some of these stocks. So the first one I wanted to pick up was Power Corporation. We're just going to buy one of these guys. And I'm going to take that on a market order into the tax-free savings account. Okay, cool. So that's good. The next one that I wanted to buy was Acon. It's A-R-E. These guys are, like we said, dropped quite far down from their recent high of $21, almost 22. And these ones I want to pick up 5. Pretty much buying these every time I open my account, and that's okay, because if you actually look at the lifetime trend, you don't really see it so much here. Their lifetime trend is pretty good for their growth. So anyways, CGX, this is Cineplex, dropping into probably my sketchiest stock of all time, down 75% in the last 5 years, but I'm just going to cautiously put in 5 more shares here and see how that goes. So that's going to be about $60. Okay. And then what's next? Let's pick up those ATD shares. Again, you can see these are just dropping off here in the last little bit. That's perfect. That's what we want. And I'll take 2 of these. Okay, cool. Again, everything is going into the tax-free savings account for now because I'm not yet at my limit. So all of the money that I'm depositing, this is all in my tax-free savings account. And the last ones in here that I want to pick up are Savaria, also pretty beat up. Looks like I should have really bought on Friday as well, or like Thursday, Friday. So anyways, again, maybe I wasn't buying stocks that day, but today is going to be just as good. I'm just going to spend the rest of my remaining money in here. So it looks like I'll be able to get 4 shares of Savaria. Okay, cool. So now what I want to do is I jump into the activity tab, and I want to take a look here at just the buys in my tax-free savings account. And for example, I'm going to open up one of these, and I want to write this down. So 5 shares and the unit price, and I'm going to take the quantity and unit price for each of these. And then I'm going to drop into the transactions tab on the spreadsheet, which is a master list of all the transactions that I've ever done. I'm going to scroll down to the bottom, and I just want to drop these in, like I said, with the exact quantity and unit price for each share, taking care that I type those in correctly. And once that's all in and I'm satisfied that the totals are matching up, then the last thing to do is pretty much jump back into the summary tab and just check in here how much the dividend income has increased per year. And at the beginning of the video, we were sitting around $2,818. Now around $2,827, so that's an increase of around $9 per year, which isn't much probably, but this is going up every time that I'm buying these stocks, and it's really motivating to always see that number slowly climbing, and that's something that I do like about dividend stocks. Now I'm reinvesting this money all the time, but in the future I would like to live off of it, or if something pops up in my life and I need cash flow for some reason, at least I'm looking here at about $235 per month that I can draw from in case I need to, but hopefully I won't, and I can just keep reinvesting that. So guys, thanks a lot for watching if you made it this far, and yeah, if you're into dividend stocks, make sure you leave a comment down below. I'd like to hear how your portfolio is doing this week as well, maybe what you're interested in buying or something like that. So guys, take it easy. I'll see you in the comments and the next video.